Hey guys, how's it going? Hope everything's going well. You guys know the drill. If you like my video, smash the like button. Subscribe if you haven't. Alrighty. So yesterday I talked about sports cards and the stock market. I saw a few comments. I wanted to leave my thoughts of what I think about that. And I appreciate comments, whether they may be nice or not, because it helps me in new videos and content. And it sparks an idea, and sometimes people may not agree with me. That's fine. This is basically, I'm chilling out, you're probably chilling out too. And this is a good place for dialogue, in my opinion. Anyways, I was talking about goats, and I believe that some of these goats, over long periods of time, are decent investments. That's my opinion. Some people may disagree. Some people may say the stock market is much better than some of these sports cards. And, some people would say, like, hey, you can't get dividends based on sports cards. That's true. You can't unless, you flip and then you reinvest in, another stock, but that's technically not a dividend. And, once again, before I get into this, when you're doing or when you're investing, make sure to do your due diligence. Don't go buy a card or a stock based on what you see on YouTube. Always do your due diligence. I have to reiterate that because sometimes people see something and they're newbies and they get really excited and they say, "Hey, this guy's doing this and I was thinking the same thing, so I'm going to buy stock X or stock Y or the Michael Jordan card." All right? Use logic, do your homework, and don't use emotion. Okay? So, going back to it, some people are saying that, hey, um, you know, the S&P 500 or the stock market provides a dividend and you don't have a dividend. Well, this is what I hear from, stock people all the time. And yeah, I have investments in the stock market. I invest. But the thing is, it depends what stock you have. Now, if you have like an Apple stock, holding over a long time, the dividend thing makes sense, right? The stock has gone crazy since 2008, 2009, and a dividend just helps you keep on reinvesting. That being said, if you bought the stock of Lehman Brothers, that stock went to zero. If you bought the stock of Bear Stearns over a decade ago, that stock went to $2 a share before JP Morgan gobbled it up. So that's why I'm like, it depends what you have. If you have quality, then the dividend argument makes sense. If you have garbage, you know, that argument goes out the window. The same thing can go with sports cards. If you have quality, you have that MJ card, even though it didn't go anywhere for about a decade, compared to, what some of these cards have gone right now. It went up 3x, span of a decade, and then it's just gone bananas. The Jordan card, as of right now, there will be a huge correction in my opinion. You know, what, $6,000 to over $500,000? That's a fantastic investment for those that made that, and that definitely beats the returns of the S&P 500. And just because I'm investing in the S&P 500, I do have criticisms of it. Every time the S&P 500 has a lagging stock, they get rid of it and they put in a better stock. I believe Tesla's in it, if I remember correctly now, because it's just been going on fire. So that's just a point about the S&P 500 and also the stock market and cards. Now, I wanted to look at an index that has been created by PWCC, and now this index is at the end of 2020, December 2020. Okay, so it's not up to date, but I do want to look at just numbers from 2008 to 2020, PWCC index. And I'm going to read you the returns. So the PWCC top 100 index yielded close to 400% from January 2008. Remember, that was the year of the crash in September, October. And from 2008, beginning of the year, to the end of 2020, that index once again rose 4x. PWCC has, its top 100 cards, based on a variety of factors. Now the S&P 500 from January 2008 to 2020 went up 160%. So you can see from those years, when PWCC started tracking their index numbers, right? You could see that S&P 500 actually was lagging the PWCC index. Some people could be like, "Hey, look at the S&P 500 index from 1985, and it's gone up 2,000%." That's what I saw in a comment. That's true. However, back in the day, you couldn't index at that time, from my memory. I don't think the Spiders ETF came until the 1990s. You guys could correct me if I'm wrong. The only way that you could basically buy the S&P 500 is if you bought each individual stock, just bought shares in it individually. And at the time, buying shares was pretty expensive. Not until the 1990s, trading and investing got cheaper. And there's also some other PWCC index numbers. So PWCC has a top 500 index. That index went had an increase of about 270% from January 2008 to December 2020. S&P 500 had a return of 160%. And what I find quite interesting is that from January 2008 to about 2017-ish, the PWCC index was up about 320 some percent. And then that index had a decrease up until the pandemic year. And then it was up 233% at that moment, over 1 year back. And then all of a sudden, because of all this funny money from the Fed, we were all at home, people were buying up all these cars in the PWCC index, and now it's 4x as of December 2020. And what I noticed, though, from that time where the top 100 cards of PWCC, from 2017 to 2020, the Federal Reserve was raising interest rates more than they were compared to in the Obama administration. And the Trump administration, they kept on raising interest rates. All the vintage cards, in that PWCC index, the top 100, those cards were going down. But what was actually going up at that point were the modern sports cards. So you had a shift, in my opinion, just looking at the data. People weren't aggressively investing in vintage cards. You started to see people maybe a little older than me that had discretionary income, and they were spending on modern cards. And that's when you saw a slow but steadily increase in the price of modern cards up until 2020, March 2020. And then last year, you just saw the huge increase in everything else. So, and also from 2017 onwards, the S&P 500 had a better return than the top 100 cards of the PWCC index. So, just looking at trends and analysis and whatnot, modern has been hot. That's what we all can agree on, especially the last year. And the reality is a lot of millennials and some Gen Zers, Gen Xers as well, they are they're spending a lot of their money on modern. And a lot of that supply right now is a PSA. Eventually that supply is going to come in the coming months. I'm seeing PWCC process some of my express orders right now, and they're close to, getting it delivered. But, one dude on YouTube was saying that probably mid-October we're going to see PSA catch up with the orders. Whatever that time is, it will be later this year, most likely. Regardless, just looking at these trends, if I had to predict, put some money on it, that modern is going to tank sharply in the next few years, which in my opinion will be a good buying opportunity. While, the vintage stuff in the PWCC Top 100 index, it will contract in my opinion, but it's not going to take a huge dip compared to modern. So, that's just an observation. I don't know if people are going to play that going in, but just looking at the trends and analysis, I don't want to hold too much modern unless there's scarce cards and there's high demand in it. Maybe looking for a Mayweather a boxing card I may hold throughout during this crash. Some of these Brady rookies I'm probably going to hold through this crash. I have a Khabib card, at PSA. If that's a high grade, I'm probably going to keep that as one of his rookie cards. So, that's what I'm looking at. And getting back to the idea of the stock market and sports cars, I know this may be a simple statement, and some people will be like, okay, this is really obvious. The reality is, it's the quality of what you buy if you're looking at it from an investment perspective. And, I buy junk too. I've accidentally bought junk thinking that it's golden. But I do buy junk, what people would consider junk. It's not, for investing purposes. I bought an Urlacher rookie card last year. I'm probably going to buy some Dennis Rodman cards. It's not because I want to make money off of it. It's because, it's for the nostalgia aspect. And I'm just looking at this sports card market and stock market just for, long-term investing, even though I think the market's going to crash in a few years, but, a new cycle is going to emerge from it. What I look for investing, regardless of whatever it is, whether it's in gold, whether it's in silver, whether it's a graded card, you get the picture. I look for quality, and I look at, buying very low. And, you buy low, in my opinion, and you sell high, and you buy the quality stuff from an investment perspective. And some people say that's common sense. But get this, in investing, people don't use common sense. And that's where, you could exploit all of this. I talked about this in my other video, the Mamba mentality video, where Kobe Bryant used to exploit people's repeated behavior. And that's what I'm probably going to do right now. A lot of people are still sending cards, to whatever grading company there is, HGA, 30,000 people were standing in line and they had 2,000 people that they could service, or 2,000 cards, 2,500 cards. So you see all of this going on. People are saying it's a buyer's market. That's how they're acting. But in my opinion, it's a seller's market. So, all these modern cards that are commons, I'm selling right now. Or I'm going to be in the process of selling especially the modern stuff. And, I'm getting into the stock market, even though I know it's a bubble. But, because the yield curve is upward sloping and positive, in my opinion, we probably have 12 to 18 months. Now, I'm not telling you guys to do this. Once again, do your homework. But, those are just my thoughts. Let me know what you guys think. Remember, if you like my video, smash the like button. Subscribe if you haven't. If you don't agree with me, tell me why. Sometimes we get passionate responses. Those passionate responses actually help me create videos. So, I do want your feedback. Okay. All right, guys. Thanks a lot. Talk to you later. Bye.